What is up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to dive into a company that was trending today, might be on some people's radars, might be flying underneath their radar, and I just wanted to talk about it very quickly. Name of the company, MercadoLibre Inc, ticker symbol MELI, listed here on the NASDAQ. We have a year low of 668, year high 1275.82, right? So that's a massive range, over 100% swing. Stock right now up 9.75% today. Sitting here at the close at $1,024.31. Year-to-date chart very quickly, up over 20% year-to-date. Now, the market cap's $51.5 billion. The PE is almost 200, right? So just looking at the PE, definitely could sell off a little bit. However, I mean, it just had a massive run basically since the bull dropped, right? So, of course, the PE is higher than it was. But, you know, I will say, in my opinion, take what the market gives you, give it a few days or even a few weeks to just calm down, come back down to earth, right? So this falls back into the NVIDIA category when I made the video on NVIDIA. I know it's a brand name company that a lot of traders want to be involved in. However, you know, I did mention the market cap was a little high, the PE was really starting to go to the moon, and they just needed to have it sell off a little bit to make those metrics more attractive for individual investors like yourself and myself to step in and accumulate shares at a more attractive price. And that's basically what we're seeing here with MercadoLibre. You know, should it be over 1,000? Yeah, maybe, depending on how you look at it. You know, should it pull back to 600? I don't know about that. That might be pretty drastic. But again, if it can slowly start to pull back in the next week or two, back to where it rose from, mid-low 800s, then yeah, in my opinion, I would definitely consider stepping in at around that price range and tucking away some shares, especially for the long term, because as we see, this company is doing very, very well year over year, right? So market cap $51.5 billion. We come down here last year. Again, I say last year, it's actually 2 years ago. That's why I hate when we go into a new year. It throws off all the words that I'm so used to saying consistently. But so technically 2 years ago now, looking back at 2021, $7 billion, right? So that's a little bit high. However, look at this growth here. 1.4 billion, 2.3, 4 billion, 7 billion. I mean, you know, even growing from 2.3 to 4 billion, that's almost a double. And then you go from 4 billion to 7 billion, so that's a 75% increase in your revenue year over year. And if we look here at the revenue for the 3 quarters of 2022, we have 2.25 billion, 2.6 billion, that's 4.85 billion, and then another 2.7, that's 7.55 billion. And even conservatively, if in the fourth quarter they post 2 billion, now you're looking at 9.55 billion for the year, which of course compared to 7.07 billion is another significantly increase in overall revenue year over year for at least 6 years in a row now. And of course, the income off of these quarters, you know, you're looking at around about 300 million here, and then of course you have the last quarter coming in, so net income a little bit higher than where it was the year before in 2021. So the company right now, if we call it 9.5, 10 billion for 2022, they're trading about 5.5 times yearly revenue, which is kind of in line where they should be, but again, just had a massive run up, so we could use a little bit of a pullback. Again, the PE is a little bit high, but I wanted to switch over here because this is the daily chart again. Opened up, you know, big drops, big swings here early on, and then as we see, we're just seeing this tightening going into the afternoon. So it does look like it may have potentially broken this ascending wedge, and ascending wedge is usually a bearish indicator, but in my opinion, I think maybe this might be the low here, this fib 1022.71, and then it could potentially bounce back up into the range and stay tightening. And as we see here on the top right of the screen, you can see it says like 1036, about 1036 to 1035, 6, 7, right? So that's going to be your apex where it could potentially break and start pulling back to sub 1,000. And that's an interesting level because if we switch over here, we can see, again here on the weekly, the 200-day moving average, 1035.30. So that's why, in my opinion, it may potentially hit that level around there which of course will be the apex of the wedge, and then it could pull back potentially to this moving average of the low 900s, which of course would make the stock much, much more attractive. It did look like the MACD was actually about to turn and drop and start to sell off. However, of course, with it up 17% this week, the MACD is curling back upwards. And if we switch over here daily, I just wanted to show you guys, obviously the MACD is rising, stock is up like crazy since the bull dropped, but I just wanted to show you guys to explain why we may have had the day here today, because as we see here, I'm showing the pivot points of resistance levels and support levels. Usually I have the Bollinger Bands on, but I wanted to show you guys that, look, yesterday, this info in the box here, the O, the H, the L, that stands for the open, the high, the low, the close. And as you see, it closed at 936.80. But if we look at our resistance level over here, 929.42. So it closed above resistance and formed really what is called basically a bullish hammer, showing you that the bullish momentum is still there in MercadoLibre. And then boom, you have a massive explosion today. And even though it may seem extreme and you may say it's ready for a sell-off, again, closed at 1024.31, resistance level 1012.60. So it's still closed above that resistance level. However, again, even going back, you can see the old resistance was 1034.59. So it does look like, right? And look at the high today, 1033.79. So it does look like we're right in that range here, 1034, 5, 6, 7. Within these few dollars here, we may potentially have that break, that rejection, and that pullback and that sell-off. So, you know, just wanted to show you guys all the different angles that I'm looking at. Also, look on the daily here. Now we have an RSI north of 70. And as we said, when the RSI hits 30 or below, it may be considered oversold. When it hits 70 or above, it may be considered overbought. So now with the stock up almost 25% in less than 2 weeks and an RSI here north of 70, and again, we may potentially have a wedge. I'm not the best technical analyst out there, I'll admit it. So if this is not accurate, let me know in the comments section. I have no problem being corrected or critiqued by you guys. You know, I welcome it. That's why I'm doing it this way. And you know, we can always learn something. So anytime anyone corrects you or may potentially say that you're wrong, don't get emotional, don't get upset. You know, ask them why. You know, what level are you seeing? Are you seeing a pattern? Is there a fundamental metric that I'm not taking into account? Maybe I missed something, right? Is there a reason why you think tomorrow it'll be back to 900 and I'm not seeing it, right? Explain it to me. Help me. Please teach me something. Take 60 seconds out of your day to make me a better investor or trader or analyst. You know what I'm saying? So that's why when you have those back and forths with people, whether it's me or some random person in the comment section or Discord, don't ever take it to heart. This is nothing to get emotional about, you know? Always learn something new every day. Make yourself better, stronger, faster than you were yesterday, right? But yeah, a couple of things here to keep an eye on, especially on the technical side. And just switching back here quickly. God, it is so dry in this room. I actually cannot wait to move. You guys believe me, I have a feeling it's going to be a completely different channel inside of the next couple of weeks when I do make that move. And I think it's going to be good for all parties involved. But, you know, just looking here at our valuation ratios and our profitability ratios very quickly, as we can see over the years, the PE has been significantly higher than it currently is, but it also has been lower, right? So this is, again, what we said about NVIDIA, right? So these companies, when they really pump them up this much this quick, this is when you may see for the next 1, 2, or maybe even 3 quarters in a row, you may not see much price action. Reason being is because it's already overinflated, right? So if this company comes out and beats earnings, let's just say for the next 2 quarters in a row, if it actually sold off a little bit or just remained flat, it would be justified. Not only that, but more importantly, it would actually be exactly what the stock needs, because then you make the PE more attractive, you make all of these, price to book, price to cash, all of these ratios more attractive, and of course, your revenue to market cap comparison is even more attractive, because again, 5.5 times isn't that much, but you better bet your bottom dollar looking at the revenue that this company is bringing in. If now we're sitting at 5.5 times yearly revenue, if that, if everything starts to pull back and all of a sudden we wake up and it's only 3.5 times total revenue, yeah, then you're going to pile in like an animal, and you're probably going to, catch the stock somewhere near the bottom and see a very nice rebound for yourself, especially in the short term. But, PE a little high, not the highest we've seen. Price to sales, 5. All right, fine. Price to cash flow, 26. Obviously, it has been much higher in the past several years, so that's really not a red flag. But, trading almost 30 times book value. I mean, I know it has been historical, but see, even here, like 20, sub 20, if it can pull back to a level like that, then yeah, I may say that this might be something that you should really consider taking a position in. Return on assets bouncing around, going from negative slightly climbing, sitting here at 2.8. Wait a minute. Annually. There you go. These numbers are relatively the same. But annually here, as you can see, was negative on the return on assets percentage. Pulls up to 1%, now sitting at almost 3%. Return on equity, again, dropped down negative, got up to about 5.25%, now back up above 30%, where it was several years ago. Definitely nothing to sneeze at. Return on invested capital, same thing. All of these numbers, as you see, dipping negative, dealing with some volatility here. Return on invested capital climbs to 2.4%. Last year, now sitting at 7.4% this year. Phenomenal. Gross margin percentage has been bouncing around as high as looking like 63.5%, as low as about low 41s. Now it rebounded and is sitting at above 50%. The operating margin percentage, same thing, has been growing over the last several years, going from 3.2 to 6.3, now sitting at 11%. And of course, our EBITDA, which is our earnings before interest, taxes, depreciation, amortization, one of our main metrics that a lot of investors, traders, fund managers look at, activists, and you can see a couple of years ago, 5.25%. Last year, 8.4%. Now 14.6%. These are not numbers to sneeze at, my friends. Our net margin percentage, we looked before, the company is net income positive. Last year was a little over 1%, now sitting almost 5%. Phenomenal, right? So a lot of these metrics and these figures are showing us that the company is trending in the right direction and they're growing hand over fist. So you may want to consider being a part of this, right? And it's funny, right now, the stock is 1022.89, and I mentioned a potential bounce off this fib of 1022.71. So, we could keep an eye on that. But again, tomorrow I do feel that it may be up a little bit. We're looking at that 1035, 6, 7 level here, hitting that 200-day moving average on the weekly. Hitting the apex of this potential ascending wedge, if this is accurate. Let me know in the comment section. And then, boom, you may have your breakdown back to sub 1,000, which, of course, will give us, the average investor, a potentially more advantageous entry level. But I'm going to leave it there. So, once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, please give it a thumbs up, give it a like. Apparently, that's all the algorithm really cares about, is how many comments a video has and how many likes it gets. So even with, right now I'm sitting at, we're up to 150 subscribers, which is awesome, guys. Thank you so much. I remember just recently we hit 100, and now we're almost halfway to 200. I really can't begin to tell you how much this means to me. I really appreciate the fact that you guys appreciate, the few words that I throw out at you regarding some of these stocks. So, I really do appreciate that support. But, overall, just want to remind you guys again, I have the personal Discord in the description. If you want to come in, you want to have a little back and forth, you want to BS a little bit. I had a couple of people in here earlier throughout the day. We were having some nice back and forths here talking about fundamentals and some technicals. Some people posting some nice profits that they made here in short-term trades, because I know that I primarily am focusing more on the long-term here. But again, just to remind you guys, my finances, it's a little bit of a rough situation. So if I do get some capital, I will definitely jump back into short-term trades and make videos like that. But now I'm rambling, right? So I'm going to leave it there. I want to thank you guys for stopping by. And moving forward, like I always say, I wish everyone success. I hope everyone makes a couple of dollars. I want to thank you guys for stopping by, and I'll see you guys in the next video. Have a good day, guys.